Good morning. Thank you for joining us for this webinar, Small Business Financing to Purchase Owner-Occupied Real Estate. I'm your moderator, Renee Goodnow from the New York Small Business Development Center. Today's presentation is being recorded to be provided to attendees and the public after the presentation. You will not be on camera. If you submit a question, we will not mention your last name or your business name unless you mention it directly in the question. As I mentioned questions, if you have them, please put them in the questions box as they come up and we'll answer them at the end during the Q&A. For very specific questions, we may need to follow up on some of those offline. Today's host is the Pace Small Business Development Center. Pace SBDC is part of the New York SBDC's network of 22 campus-based centers and outreach offices, which are located across New York State. The New York SBDC is a U.S. Small Business Administration resource partner. Our services are made possible by funding from the SBA, New York State, and our host campuses. Joining us to lead things off and introduce our presenters is Pace SBDC Director, Andrew Flam. Andrew, I'll turn things over to you to get started.
Great. Thanks so much, Renee. Good morning, everybody, and welcome to what I think is going to be a terrific session. We have a couple of very dynamic and very active small business lenders today, as well as the district director from the SBA, Beth Goldberg. So I think some excellent contacts for you, small business owners, as you're thinking about building and expanding your business, and look forward to hosting this session. First up, I should say good morning and kind of welcome from Pace University. We're based in Lower Manhattan. Our offices are back open part-time, and we look forward to working with you all. If you're not presently working with a business advisor from one of the small business development centers located throughout New York State, we would certainly encourage you to do so. All of our services are offered at no cost to you, and we provide kind of dedicated and intensive one-on-one business advisory assistance to both existing small business owners as well as aspiring entrepreneurs. So we look forward to working with you. I will add some items in the chat in a moment. I'm kind of letting you know how to reach us, how to arrange a one-on-one session, and some other kind of relevant notes. Renee, do you have control of the slides, or can you scoot ahead? All right, so if we could move forward, there's the list of some terrific and very handsome folks that you'll be hearing from later today, and we'll introduce them momentarily. But again, I want to go through very briefly kind of who we are, what we do, hopefully how we can help and sort of set the stage for you today. So next slide, please. So we are, as Renee mentioned, we are part of a network of centers throughout New York State. We get funding from a wide range of sources. The SBA, a key supporter in New York State, and our local campuses. So there are 22 of us throughout New York State. So depending on where you are, certainly an SBDC not terribly far from you. If you can go ahead. I think we have a list. I guess first I'll go through kind of the services that we offer. Again, kind of one-on-one business advisory services. Here at Pace, we're doing that via virtual sessions. We also do kind of sessions via phone calls, emails, and really working to kind of dig deeply into one-on-one services and things that you need to kind of help build and grow your business. And I'll go through those items in a minute. There are also a range of training sessions, so we're delighted that you all are here today. Again, there are sessions available throughout New York State that are available to you on an ongoing basis, and we'd certainly encourage you to take advantage of those. So next slide, please. So here is where you'll find, and I'll provide a link to the different sessions that are offered. Again, we certainly encourage you to take advantage of them in a wide range of topics. So next slide. And here is a location map. So again, we're based in New York City, quite a few of us located down here, but depending on where you're located, there are centers available for you, for those of you that may be dialing in from different parts of the state that you can kind of connect with. And again, we'll provide that link to you in the chat. Next slide, please. So the issue areas that we typically go through, obviously today, the topic will be access to small business financing, sort of thinking about, different lines and availabilities for you. So whether it's a term loan, lines of credit, thinking about how to build out a crowdfunding campaign, identifying investors, looking at other equity investments, and kind of the pieces that kind of carry a lot of this together really are thinking about how you build out and develop financial projections and a business plan that help make sure that the lenders or investors that you're looking to work with kind of have a sense that your business is a good bet, and they're going to feel confident in kind of where you're at. And that's certainly kind of something that I'm quite certain kind of the lenders that are participating today will talk In some non-financial news, I guess, in terms of some of the things that we work on, just to kind of give you an overall flavor of who we are and what we do, we have dedicated business advisors that work on helping you with your marketing efforts, whether it's building out or expanding your website, social media campaigns, and sort of thinking about lead generation and pitch strategies. You know, you're looking at both kind of reaching investors or lenders, as well as kind of a wide range of other prospective interested parties, kind of helping them kind of get a better sense of who you are and what you do. So we certainly do a lot of work in those areas as well. Next slide, please. On procurement, you know, this is, as we work with Beth and her colleagues on a number of issue areas, the federal government is a huge purchaser of goods and supplies, as well as state and city government. So we do help work on identifying procurement strategies, getting certifications for minority and women-owned business enterprise certification, and other relevant certifications through the SBA that can help you get a leg up on your competition. You know, we do have dedicated contract opportunity emails that get distributed to small business development center clients through a process that we call bid links. We certainly encourage you to take advantage of that by working with a one-on-one business advisor, and again, all those services are offered at no cost. We are also very fortunate to have a terrific team based in Albany that does a great deal of market research for our clients through the research network. These are folks that kind of help pull together compelling data that can help you identify whether it's key demographic information, spending patterns, thinking about prospective new client opportunities. This really kind of helps you hone in on kind of your market. And again, this is a very, very in-depth and kind of really compelling information that can help you as you build and grow your business. And again, all this is available to SBDC clients at no cost. Next slide, please. So today on small business financing issues, we're really focusing on kind of access to finance that will help you purchase commercial real estate. This is an opportunity to sort of look at ways to build and grow, and thinking about how to kind of manage your real estate costs going forward. And there are a number of compelling programs, both sponsored, led through the SBA, as well as other efforts that are available that are not government oriented, that are kind of really oriented through the individual financial institutions. So we have kind of a good representative sample of groups that are with us today that will walk through some key programs that you should be aware of. And sort of thinking about both traditional lenders. We have Mary Beth Kushner from Dime, alternative lenders, kind of community-based organizations that may be better situated to kind of work with groups who are looking at building a credit profile, and kind of terrific. We're really blessed here in New York City, in particular, I guess, with some excellent community-based lenders, TruFund and Pursuit among them, and so you'll hear from them again today as well. So next slide, please. I want to just kind of put a couple of quick terms out here so that some of the lenders may be referencing these, but sort of thinking about kind of the term loan versus line of credit, what you're using your funds for. I mean, this particular session is really focused on real estate, so this is kind of a long-term asset, not something you want to be able to float with short-term money. So thinking about how to make sure you have the capacity to pay for these things over the long term. Fixed or variable repayments, you want to sort of look at how you can manage your financing going forward, and obviously real estate is a very big piece of your operating expenses, and then sources of financing and personal guarantees that I'm sure we'll touch on a bit further as well in the discussion. So next slide, please. We will put this up again later, just against a couple of terms for you to consider: the 7A loan program and the 504 program. I'm not going to go into detail here. This is Beth's area of focus and expertise, but just to know that these are a couple of terms that you'll hear a lot today, and certainly are things that you should be aware of. A couple of dynamic and very, very important programs that a lot of our clients have taken advantage of over the years. Next slide, please. So next steps. Again, just wanted to reiterate, we are here to help you. We're really in a position to help kind of generate economic activity here in New York State. So we really would encourage you, if you're not already taking advantage of, be able to connect with a small business advisor to go through some of the requirements that the lenders will walk you through today in terms of how to position yourself for financing long term, thinking about business plans, thinking about financial projections, and obviously realistic assumptions about how you kind of make sure that the folks here on the screen today are going to feel confident in your long-term capacity to repay those loans. So next slide, I think that may be it. Meet with a business advisor. We'll share that link with you as well. And then I think the last slide, hopefully, is my contact info, and then I'll get out of the way. And we do have some COVID-19 related financial resource programs that I know a number of these lenders are active in as well. I'll put the link up for that in the chat, just for folks that have other topics that may be a bit off from what we're discussing today. But if these are things that are of interest to you, we can certainly help you with those as well. So without further ado, that's who we are and what we do, and really appreciate the time, and obviously really appreciate our lenders and our colleague at the SBA to take you through some really important topics today. So thanks for taking the time, and I will turn the floor over to Beth Goldberg, who is District Director of the New York District Office for the Small Business Administration. Beth, it's all yours.
Thank you, Andrew, and good morning, everyone. I want to encourage you to celebrate National Small Business Week, which is running all week. President Biden issued a declaration for this week to celebrate our 31 million small businesses across the nation. I'm honored to lead the New York District Office, the largest district office in the nation. We are 1.6 million small businesses strong, employing over 3 million people. And that didn't sound right. Yeah, 3 million people. And I've been on vacation, and so I'm a little bit slower than usual than my Brooklyn girl usually allows me to be. So with that, before we get into today's topic, very important, yesterday, the administrator of the SBA announced changes to our economic injury disaster loan program, increasing cash flow allotments under the loan from $500,000 to $2 million and allowing for some prepaid debt expenses. So if anybody out there in the audience today has an EIDL loan or is thinking about an EIDL loan, please either go to sba.gov and click on the link for EIDL, or contact your Andrew at the Small Business Development Center, who can help you increase the funding or initiate a new loan. Applications will be open until December 31, 2021, and will for new applicants, but please don't wait for the last minute. It's really difficult when the systems get overwhelmed and people can't get into the site. So if you're thinking about getting a loan under EIDL, please apply as soon as possible. Get your list together, know what you need, go on the computer. It's the only way to actually access the loan. It's the only direct lending that the SBA does. You'll see in Andrew's first line, SBA does not fund loans directly, but in cases of disaster, we do. And there are certain counties in New York that have now been opened up for the disaster loan due to Hurricane Idle. And Andrew, maybe we'll come back and do another session just on Hurricane Idle lending, so that people can know what to do. And certain parts of the Hurricane EIDL program, different from the pandemic, will be available into 2022. So very important that if you've been affected by the pandemic and or Hurricane Ida, that you seek out that funding. During the pandemic, there were many changes done to SBA lending, allowing deferral of loan payments to help businesses with cash flow. And the program that we're going to talk about today, the 504 real estate program, allows refinancing of long-term fixed assets. I'm going to allow the lenders to talk about their sweet spots and their specific underwriting criteria, but SBA did open that field up. very important in New York for businesses to think about owning their own real estate. Pre-pandemic, we saw lots of our long-term 100-year businesses go out of business simply because of the rent increases of their space, and that they've never thought about, owning owner-occupied real estate, which in New York City and Long Island and some of our surrounding areas include the co-oping and condominiums in massive buildings, which now would be considered under 504 rules. You could finance that with 504 businesses. So people who do not necessarily need ground floor office space can be in the multi-story buildings that have been co-opted or have gone to a condo structure. In addition, pre-pandemic, I've done a lot of work with developers in New York City about doing this, using that format to allow certain spaces in their new buildings, especially in Long Island City, to have some format of condo space for small businesses in their major developments, these 1 million, 2 million square feet complexes we see going up in Long Island City, Brooklyn, and other places. So think about that as a space that might be appropriate for you, and how you could secure your future with 25-year financing through the 504 program. Two other points that I quickly want to make before I turn it over to our panelists is, lending has changed because of the pandemic. We used to look at your historical financial statements and a projection over a certain time period, but people are looking more in depth at those documents. We need to know whether there exists a supply chain for your business. What's happening with the businesses that you do purchase from in order to create your product or your service? Underwriting has become more comprehensive as it was before the pandemic has changed the nature of lending. And we need, we always say at SBA, you don't only need to work in your business, but you need to work on your business. Forums like what Andrew is providing today is very important to update you and educate you on the changes going on in finance that can affect you, your business, and the long-term viability. So listen very closely today to what our experts have to share with you. And lastly, I just want to say SBA runs a program called Lender Match. We've had over 400,000 entries into Lender Match. You can find it on sba.gov, /Lender Match. And if you don't know where to go for lending, and besides the SBDC or the lenders here, you hear something that might not be appropriate for your particular situation, go on Lender Match, tell people what you're looking for in the nature of your business. And we went from 1,200 lenders to 5,500 lenders during the pandemic nationwide, and someone might pick up what you're looking for. Many lenders from outside of the New York area do lend in New York City. So check that out. If all else fails, people have put full-time staff. Lenders have to sign up for the program. So not all lenders in the nation are on Lender Match, but it's another source for you to seek financing as opposed to finding a predatory lender. So with that, I'm going to turn the session over to Mary Beth for her to introduce herself and talk a little bit about DIME in the program. So thank you very much for the opportunity, and I'll pipe back in a little later.
Thank you, Beth, and good morning, everybody. Actually, I've been with the Dime Community Bank for over 2.5 years, but before that, I was with JP Morgan Chase for 35 years, concentrating in commercial lending, and the last 12 years focusing on SBA lending products. So just to know, Dime has become a commercial bank. And we merged in February with Bridgehampton National Bank, and it affords us to double our assets to $13 billion. We have 58 branches from Montauk to Manhattan to service our clients. Our SBA team consists of a division manager and 4 lending officers and 2 administrators. We focus on the SBA products to include the 504 program, which we'll talk about a little more in depth. The SBA 7A program that we do use for debt refinance, but as well as doing permanent working capital, expansions of products, expanding your business, and the SBA program, which goes up to $350,000, which we use for term lending or line of credit lending. Now, these products obviously afford a business to get to the next step. But again, today we're concentrating on purchasing owner-occupied real estate. I will say that the Dime Community Bank, we also, on the direct lending side, offer investment real estate, multifamily, direct lending as it is, regular lines of credit, term financing, or an array of deposit products, as well as cash management. So the SBA team and the relationship managers work together to make sure that client has all the needs for a banking relationship. With regards to the 504 program, we partner with Pursuit, which you'll hear from Justin and in a little while, and it's Justin's team. Obviously, Pursuit is a certified development corp, and the bank does approve the first mortgage. Pursuit approves the second mortgage and is the conduit to the SBA. And we're active lenders in this space. It affords a client that is renting, and I guess we'll go through examples later, but how you can go from renting to owning, and how the SBA programs afford that for certain businesses. Again, we're very active in that space. Again, I've been working with Pursuit for over 12 years, and they're we work well together, and we've done a lot of deals in the New York City area. So I guess at this point, I'm going to turn it over to Justin, and he can go over the general 504 program and how it works to purchase an owner-occupied real estate.
Thank you, Mary Beth. I just want to say for the audience, there are 3 parts to the 504 program, which Justin can maybe go into in a little more detail. It's the business's equity, the bank's loan, and our community development corporation partner. Very technical. There's a bond floated after the loan is made and proceeds are released. So I don't really want to get into all that technical stuff on how it actually floats in the market out there. But Justin, if you can, it is a 3-party as opposed to a 2-party loan. So if you could address that in your remarks, that would be great.
Sure. Nice to be here and be able to talk with you all about, the SBA 504 loan program. My name is Justin Leone from Pursuit. I've been a commercial loan officer here for about 4 years now. Some of you may know us as our former name, New York Business Development Corporation. We recently rebranded to Pursuit in 2020, and so the name Pursuit's fairly new, but we've been around since 1955. We're a nonprofit New York State chartered bank, strictly transactional lender, and we are licensed to administer SBA loan products such as the 7A and 504 loans. Our company lends in New York, New Jersey, and PA, and we partner with banks such as Dime, administering these programs. And I'm I'm here today, to specifically go over the 504 loan program, which, in my opinion, is the best program out there for a small business looking to, flip a rented commercial property into commercial, owner-occupied real estate. You're only putting in 10% down equity contribution, which preserves working capital for the business. And, through the program, the SBA will allow you to lend up to $5 million. If you're a manufacturer, that gets increased to $5.5 million. The loan terms can vary from 10 years to 20 years to 25 years. And as Beth touched upon, there's a little bit unique in that, the program provides 90% financing. However, there's two separate mortgages. So you'll have third-party lender mortgage, which in the example of partnering with Dime, Dime would provide 50% first mortgage. Pursuit, licensed by the SBA, would administer the 40% second mortgage. And as the borrower, you would only have to come up with 10% equity into the project. Sometimes it's fully funded by, putting down a deposit per the contract. Sometimes there's additional equity to be injected to meet the 10%, but at the end of the day, you're only putting in 10%. There's certain occasions where that 10% jumps up to 15%, and you'd be able to get 85% financing. In that case, if your business is considered a startup, which would be, established less than 2 years prior to the application date, the SBA would require at a minimum 15% equity into the project. In another instance, if the property you're purchasing is considered a special purpose property, such as a bowling alley, movie theater, etc., the SBA will require a minimum of 20% equity in, and you'll be able to obtain a maximum of 80% financing. And outside of the purchasing commercial real estate, there's also a separate branch of the 504 program for refinancing existing mortgages, which is also something we've been seeing a lot of lately, given the low interest rates in the market. But yeah, I'm here to just go in more depth about these programs and answer any questions that are out there.
Thank you, Justin. Can I just ask, are you still doing 10% in the pandemic era?
Yes, we're still doing 10%.
Okay, and so the structure of the 504 is 50-40-10, we say, and we use 12.5 million as the maximum that the SBA can participate in. But the loan can be more than 12.5 million, but the SBA piece will stay at 5 or 5.5 million, depending on your type of business, and may become less than the 40%. And it's very important that in the 504 program, an organization like Pursuit is involved, because they are SBA's partner to float that bond issue. So a 504 cannot happen without a community lender. And in New York, Pursuit is the largest community lender there is. So with that, I want to introduce you to Robert. Robert's TruFund is a micro lender. The New York district is very lucky. We have 6 micro lenders within our district, and they work on a whole bunch of issues, from credit repair to getting your first loan. And TruFund has a new initiative in real estate. So I'm going to ask Robert to introduce himself and to give us 1 or 2 examples of what this new initiative is working on in real estate. And then we'll go back to our other lenders to talk about some of their examples before we take questions and answers. So Robert, the floor is yours.
Great, thank you, Beth, and thank you all for having me here. Good morning. TruFund is a nonprofit lender. We started a commercial real estate lending program this year. Just to touch on highlights, as far as the differences, basically, it's commercial lending. It's 25-year amortization, basically standard. We're starting with a 90% loan to value loan. We are rolling out a 95% loan to value loan at the end of this year. So with 5% down, you can purchase commercial real estate, and that would be either for owner occupancy or investment. We are also lending on construction right now for owner occupied. So if you want to purchase land, build or renovate the property to primarily occupied, we will lend you 90% of all costs, including interest reserves. We do work with borrowers that have credit challenges, so we can still get you into the property with 10% and again 5% down at the end of this year. And we're also really looking to get the first-time property owners in the properties by using other assets. If they still have trouble with that 5%, we can match some of that capital as well, just to bring you up to that threshold. We underwrite internally, so we're flexible with qualifying. The goal is to make sure that if you can make the payments, we get you in the property. And in New York, if you're paying rent, you could probably pay a mortgage. It's just the nature of the beast. I think in regards to what we finance, anything that's considered commercial, so we will not finance a 1 through 4 family. Anything outside of that, we will, including condominiums and everything in between. And again, that includes renovation and construction being ground up. And that's important because if your preference is to purchase land or purchase a property and repurpose it, we'll give you 90% of that this year and 95% of that next year. We will include interest reserves, which is usually something that you need in order to get a loan. So we'll basically finance the money that the business owner needs to pay us during construction. We will convert it at no cost to a term loan, and then we're working on rollover, so it becomes fully amortized for 25 years. So that's basically it in a nutshell. And of course, we provide, in addition with the commercial real estate loan, if you need additional funds for equipment, furniture, anything that you would need to get the commercial property ready to run your business, include an inventory, we'll provide you with that funding as well, along with the real estate loan. Thank you, Beth.
Can you give us an example of a case study or business type that walked into TruFund, and I know it's a new program that you're working with to get ready for a loan in this program? Yes.
One of the I guess most recent situations, we had a hairstylist that's been renting the property for 20 years. As we've all mentioned, rents went up, and of course the landlord was trying to make up for the fact that he was suffering through the pandemic. We're going to give him 95% financing to purchase the property, and he'll need to do some work in the property because the property just has not been taken care of. So we'll give him some extra capital to fix the property, and then during that time we'll do interest only and then convert it to a term. But that's one situation where he had the 5%. He just couldn't come up with more.
Can you give us an idea what his rent number was?
Yeah, initially he was paying $1,400 a month. It was almost he was a legacy tenant, so no one bothered him for many years. The pandemic kicked off, and the rent increased beginning of 2020 to first quarter 2020 to $3,000, and then 2021 he was told that had to go up to $4,000. So there were no covenants in the lease. It was a new lease. They were giving him a year-to-year lease, so that rent just went out the window. So at $4,000 a month, it just became very cost prohibitive, and he had his clients that had known him for 20 years. So if he moved, it was basically a startup. And so we're able to go in there, give him the loan, and
how much is the loan for, and what are his payments now, and how long is the term on that?
Yeah, the loan that we gave him was for 2.5 million. We gave him that loan at 6%. I can't tell you off the top of my head what the payments are, but we did give him interest only for 6 months. He asked for 3. We did the underwriting. We thought 6 was a little better for him to stabilize. And then we gave him $20,000 to do some facade improvements and painting and put some new signs up. He's extremely excited. The other example, which is on the other end, a lady that was a professional basketball player, got hurt. She's a trainer. Her rent was at $8,000 a month. It went up to $20,000 a month. And at $20,000 a month, it just didn't make sense. But her community relies on her, the children in the community. And so she wanted to buy a property, build a facility from the ground up. Banks wouldn't touch her. She has no experience in real estate. We are giving her $3 million, which is 95% of the cost to purchase and cost to construct. And then we are giving her a $250,000 loan to purchase the equipment, and she'll be able to. The property is maybe a half mile away, and so she will own almost a $4 million facility, and she will continue to service her client base.
So one borrower had $50,000 basically of available cash flow if he went from rent to own, and the other one $250,000. So very important for businesses to assess their situation in this market. And one of them moved, but stayed within her market base in order to service her clients. So, okay, Mary Beth, could you take 5 minutes and give us a couple of examples of, do you have a sweet spot? Is there something you don't do, and then give us a couple of examples of 1 or 2 successful businesses.
So basically, I concentrate on for real estate owner occupied on the 504 program. One example would be we just recently funded a jewelry retailer in Midtown. They were renting and they wanted to own. So they were able to purchase a commercial condo in Midtown and purchase the whole floor. So this would afford them to, they were outsourcing their manufacturing. So they just hired someone specialized in manufacturing and now is building out their manufacturing arm at this space, which would give them the savings of not outsourcing that, as well as save them on rent increases. So that one was, they were moving to a larger space and expanding on their manufacturing ability to bring that in-house. So obviously they were able to do 25 years financing, which covered the rent expense that was approximately, I think it was like $300,000 a year. So again, we partnered with Pursuit. It was actually, this one was a challenge due to the riskiness of the industry, the jewelry industry. And the financials were a little weak, so we did have to, so we did look to get that 90% guarantee. I'm sorry, we looked to actually get the 50% for LTV after we get taken out, as Beth described, when the bond floats, we get paid off. We do interim financing also. So my quick example is, just say you were buying $1 million commercial condo, the borrower puts down $100,000, Dime does the first mortgage at $500,000 on our terms, our conditions, our rates, and then the $400,000 that Justin would would approve, we finance that for a couple months until that bond floats. And it's on timing. They only float them, once a month. So we fund the interim part. So when you come to the closing table, you buy that property and you own it. Again, within 30 to 45 days, you can move right in. The SBA pays us off, and then you start your 25 years amortization, or 20.
And how much,
So
Mary Beth, how much was that loan approximately for? The person was paying $300,000 in rent, and they ended up with a facility of approximately how much?
Oh, that facility, actually, it was half of that. It was 150. I'm sorry, I was thinking of a larger deal. We did a $12 million deal. This one was $2.1 million on the first mortgage and $1,720,000 on the second mortgage. And it was a $4.3 million project, and they put in $420,000, $430,000, and then we financed first mortgage, and we're waiting to get taken out on the second.
Okay. Do you have another you want to go over, or?
A quick one. This one was unique that they were actually partnered with Pursuit. It was a highly specialized film studio. And what happened in this transaction is they were renting in their facility, and they needed to upgrade the space. So they utilized the SBA 7A program for a leasehold improvement loan. So they ended up, and they put in about $400,000 in renovations to, make their production studio more sufficient and build out their office space. So what happened was they did have the right to first refusal to buy this property. So being that they just spent $450,000 to renovate, they were really, looking to purchase, and they did have another offer. It was a cash offer, but they did go back to the landlord. So in this one, it was a little challenging because their financials weren't like great. However, in this case, they put in a little more down payment, and we worked with them on detailed projections, which I will say that's where the Andrews group comes in to help help do those projections, as well as know that we need detailed assumptions to get them to clean up their balance sheet, or in this case, it was challenging. But at the end of the day, by them giving in a little bit and us stretching that payment, they were able to not lose that property, and we actually financed that project.
Terrific.
That one, purchased for $1.7 million. Again, they put in a little bit more, so it varies. So the point is that each deal is done different, but what can we do to get to say yes? And that's the most important goal. That if you're right there, how can we just get you over the top?
That's really an important point, that the lender and the business have to enter into a partnership, and everybody needs something, and lenders are usually willing to help you figure out what you need to do, and if the time's not right, give you information and come back when you've completed the assignment. And Andrew's organization and the SBDC network helps you accomplish that, and also they have access to unbelievable market research that you would pay, Madison Avenue $50,000 to $100,000 to produce a report like that. And I don't believe Andrew charges anything for that type of market research. He's shaking his head no. So it's very important to know that they can help you produce, projections that are superior to anything that you could probably buy on the market. So With that, I'm going to turn it over to Justin for an example. Justin, can you nobody's talked about the 504 as the deal of the century when the interest rates that are floated on these bonds. And, it's the best kept secret in the real estate market between the 10% down, the 25 years, and the interest rate. So if you can, when you talk about your examples, if you could address that, that would be great.
Yeah, I mean, the rate, as you noted, the rates right now are historically low. We're looking at rates on the second mortgage of about ranging from 2.8 to 3.3%, depending on the loan size and the loan term. So it's a huge advantage, and I encourage whoever is eligible for the program to look to take advantage of it. I guess I'm trying to think of an example. The best and easiest example is, you have a business. For example, I just did a loan for a business in Brooklyn who was renting their space, and they had, a rising rent price, which they wanted to, get rid of. And, there's obviously uncertainty with rising rent prices and, down the line in the future. So the best thing to do is to buy the property, and, through the program, the second mortgage interest rate is locked over the loan term. So at the closing, or once the SBA debenture funds, your rate of 2.8 to 3.3% is locked in for 25 years, and you don't have to worry about future rising rent prices. So you definitely get the benefit of saving on rent expense.
Justin, do people come to you as opposed to their lender, seeking to put a 504 deal together? And how do you, if somebody should enter your system first, is the first door one, how do you put the deal together for them, since you're not the primary, you're not the first mortgage lender?
Yeah, so deals come in from various sources. We have good CPA referrals. We deal with real estate brokers who shop around deals. And when we're involved at the beginning, before prior to any third-party lender being involved, obviously first thing we'll do is check the eligibility to make sure it's something that's viable through the program. I guess just touching on eligibility, the two main eligibility factors for the program is, number one, the occupancy. So the small business concern has to occupy at a minimum 51% of the commercial space, based on the total square footage of the building. Could be a commercial, industrial building, a mixed-use property, commercial co-op. As long as they're in at least 51% of it, that's the main eligibility factor. Other than that, the program is built for job creation. So for a normal business, being not a manufacturer, the job creation requirement is $75,000. I mean, one job for every $75,000 lent. It goes up to $120,000 for a manufacturer. That being said, if a business, is not looking to, say, for example, you have a business who is operating from a location that they're looking to buy, and they're not really going to be adding on, the right amount of job opportunities to meet the eligibility. There's other ways around it where we can utilize other public policy goals and community development goals to meet that eligibility factor.
Okay. Thank you. I'm going to open it up. Are there questions, Renee? I'm going to open it up in a minute. Okay. So I just want to say, I operated a small business in New York myself for many decades, going back into the last century. But, sometimes we think we're alone and who's really using this program. So I just want to give you two stats as to what's happening in the 504 program. In our district, which encompasses the 14 lower counties in New York State, so we go all of New York City, Nassau and Suffolk, and the 7 counties of the lower Hudson Valley. Between this year and last year, during the pandemic, there was over a 91% increase in use of this program of businesses either seeking debt refinancing or expansion opportunities through and securing their space. And we've just done under $250 million of lendings prior to the close of the fiscal year, which will be September 30th. Nationwide, this program has exploded. And there's been a 38%, 39% increase. And we've done over $8 billion of lending to just under 10,000 businesses across the country. You're not alone when you're sitting there thinking, is this for me? Other people are grabbing, you know, money. These services, people sometimes say, you know, the services are free. Can they be good? What's going on? Let me tell you, they're not free. Your Uncle Sam is really behind the 31 million small businesses across this country. And you are so important to our economy and the recovery. The recovery of the Great Recession was dependent on small business. I'm sure as we pull out of the pandemic, you will be just as important. So $8 billion has already been expended this year in this program nationwide. So if you're thinking about it, step up. Uncle Sam has a big checkbook, and, you know, figure out how the resources being provided can help you and help you stabilize your business. And with that, I'll open it up. Renee, you can let me know what the questions are, and we'll see who wants to jump in and answer them.
Absolutely. We had quite a few that came in just on some clarifying points on minimum requirements. So let's see, I think we can answer a few of these if we cover a couple of these. You mentioned interest rates that you're seeing. Did you put a number on the interest rates that you're seeing?
Interest rate, well, Justin spoke about the interest rates from the SBA portion of the bond being floated. Robert mentioned that he's doing his loans at about 6%,
Okay.
if that's correct. So Mary Beth, I'm sorry, can you talk, I should know that, right? Mary Beth, can you talk about, you know, Chase's position on their 50% of the mortgage, what your loan rates go for and how you determine that?
If we do a 10-year term over a 25, they're in the 4.25 range. Sometimes some of them will do a 5-year and then reprice at another 5, and they're probably in the 4. So the 10-year straight's probably, you know, more 4.25, and the 5 years is around 4.
So you're getting a blended rate on your mortgage of between 3 and 3.5%. Is that accurate? At least for the first 10 years. Correct? And remember
with
the
SBA being so low, when you combine them, the SBA rates are in the 3s, right, Justin? You know, about 3. So a great rate for 25-year money. I don't know how long we'll see that.
Right. So that's your blended rate comes out to a little over 3% right now. Correct?
Probably on the higher 3, you know, with 3 and 4.25, average it probably high 3s.
Okay.
375, 3.
3.5, 3.7.
Again,
It's definitely less than conventional money, correct, in a longer term. And less money down, a longer term, and lower interest rate. If your lender does...
I just wanted to point out another aspect, and just because we lend so much in New York City and the 5 boroughs, that you have to understand another benefit is on Justin's portion of the loan, that mortgage recording tax is exempt. So there are SBA fees that are, you know, added to the loan and amortized over the 25 years, but a big, you know, when you're paying 2.8% in mortgage recording tax and saving that, that's another long-term benefit to the program.
Right. So mortgage recording tax on the 40% of the mortgage waived. A low interest rate, below conventional financing, a longer term, and the least amount of equity anyone's probably going to ever ask you to put down on a loan. So big plus for 504. And for Robert's program that's looking for 5% equity down in his fund. So a win-win. Renee, another question?
Absolutely. We did have quite a few questions come in terms of minimum qualifications and requirements. I'm guessing there's a few. Is there a good reference for us to email folks so they can view all of those, or do you want to go through them quickly?
Well, I think we sort of went through them. I guess you could send people the link from sba.gov on the 504 program.
It might be folks that jumped on a little late and missed some of those examples.
So, and this is being recorded, right? So you're going to circulate that as well. Does anyone have anything they want to say on that, or do we want to move to the next question?
We can move to the next.
So, basically you have to be in business. Is there any industries that you're not, SBA does not lend to illegal industries. So, if you're running a
One of the questions was if there was any legal businesses that you won't approve for a loan.
So the federal government has not yet approved marijuana-related businesses. So while they may be state regulated in certain states, they're not federally approved yet. So SBA will not do that. We will not do gambling, prostitution, things that exclude. It's very difficult, and you have to work through that. Businesses that exclude other businesses. So, for example, when Curves was a big gym on in New York, and they wouldn't allow men in, if they wanted SBA funding, they had to include a men's bathroom and facility within their space so that men could be allowed into the facility. So we're very open. There are a couple of restrictions, but not many. And then each underwriter has, a sweet spot usually. Pursuit as a CDC, I'm just going to say this for you, Justin, probably gets involved in most industries, correct?
Yeah, that's correct.
And Mary Beth, does Dime have anything that they do not lend to?
Again, we're pretty much on the same avenue as the SBA requirements. Again, depending on the transaction, we have to, like for hotels or something, we have to make sure we have the availability, depends. But mostly, most of our lending is small business with office space, retailers, manufacturers, wholesalers.
Okay, and Robert, your funds are limited to minority businesses. Do you want to address that a little bit, or?
Yeah, outside of the New York area, which we do lend in the southeast regions of the country, it's limited to minority business owners. In New York, we can lend to non-minority business owners as well, but that's restricted to New York and central and northern New Jersey. And I bring that up because we do have businesses that are spread outside of New York, and we will look at where they're originated or where they're operating. And as far as same thing, we don't lend to any type of illegal or any type of business that the government has not legalized. We will not.
Okay, thank you. Next
Robert,
question.
this might be a good follow-up one for you.
Actually, Renee, can I just jump in just for a quick second?
Absolutely.
To respect everybody's time, it is 11 o'clock. The panelists had been kind enough to indicate in advance that if we ran over, they would stay a bit longer. So again, for all of you, I really appreciate you staying on. But we're going to probably be wrapping up in maybe another 10 or 15 minutes. I think it's going to be our hard end date, or our time rather. If you do have follow-up questions, please type them into the chat and we will be able to respond to you all And obviously, we're looking forward to kind of following up with you one-on-one to be able to help work with you on your individual business ventures. One quick comment that I wanted to make was that, hopefully you're getting from this is that these are some lenders that are really targeted and focused on kind of serving the small business community in New York. And I think, TruFund and Pursuit in particular, I guess, two really dynamic kind of community-based lenders that really have flexible underwriting that work with not just kind of super well-established, businesses, but with outstanding credit. These are the kinds of lenders that you want to work with, when you're trying to kind of get yourselves, build capacity and kind of build your ability to kind of, look at how to kind of expand your business here in New York. And Dime is a very active and very kind of, solid kind of community-based focused kind of larger lender as you start looking to kind of build your capacity going forward. So just, very broadly, I want to kind of thank the three of them, and then thank you all for kind of participating. So I'll jump out again now. Thanks.
Yeah, we got a ton of really specific questions that we won't be able to answer on here because of time, and they're super specific, so they probably would be best to have Andrew's staff follow up on those. So we'll do an export of those questions that we don't get to, as Andrew mentioned, to follow up to. Robert, so there was a minority-owned business owner that is, they own 2 trucks and would like to open a truck park. The need is great in the Bronx. How can this program help me? Is that a good one for you, Robert?
Yes, we're very interested in what we call, and my background is in traditional banking as well, what we call non-bankable bars, right? So if we do our job, then they usually don't need us the next round. And so we're looking to help the business owners with little capital, maybe some challenges with their financials, credit challenges, anything that would make it a little difficult for them to pursue traditional financing. So the answer is yes. We're very active in New York and as I mentioned, Jersey and Southeast regions, but yes, we would.
So the micro lenders, if you remember, I said we're fortunate to have TruFund and 5 others in the district, and their goal is to help you graduate, to do your first lending, to establish your good credit, to provide you with a track record, all the things that more established lenders or regulated lenders are looking at. Micro lenders are not-for-profits, and they're there to help you accomplish that first early round business success and pass you on. Right, Robert? Graduate.
Absolutely.
Okay. Maybe 2 more questions, Renee?
Absolutely. You mentioned many pros. What are the cons to the 504 program?
I personally can't think of any. Probably it may take a little longer. Justin's shaking his head, and those final rounds of the SBA debentures being sold on the market, there's not a set date for that. So when your lower interest rate kicks in, I'll pass it to Justin. You have any other cons on that or want to expound on that?
One of the other things that people don't enjoy when dealing with the program is when the owners of the small business have other business ventures and interests in other businesses. The SBA requires full disclosure and receipt of tax returns for all of the other businesses, a separate analysis for those companies, and obviously they go into certain calculations that are also done for eligibility. So there's a lot of documentation requirements that are required through the program, and that's another thing that people, I've gotten some negative feedback in the past with.
Mary Beth, you have a comment on a negative?
Actually, my first question when I go into a client is I say, are you going to be in this building for at least 10 years? Reason being is, we have our own prepayment, but SBA 504 has a prepayment the first 10. So if you're looking to get out quick, maybe this is not for you, but generally people, when they buy a piece of real estate, they're expanding their business, and they are going to be in there for 10 years. But, I've had others like, I'm thinking of doing A, B, and C, and perhaps this program's not sufficient for you.
So the 504 is not an investment opportunity. It's a stabilization of your business. So if you're thinking, I'm going to go here and I'll stay here for 3 years and then I'll go there, and this is really not for you at that point. This is for owner occupied stabilization and expansion of your business, or refinancing a location that you've been at for a while. The affiliation rules that SBA has are very extensive. It doesn't pay not to tell your lender anything. It just delays you. Just be open and they'll tell you what they need. And the only thing I can tell you for certain is that we do not want your firstborn. So just be open and honest about it, and the lender will tell you what they need. We've had a lot of the affiliation issues with the PPP loan program and EIDL, and and which EIN are you using? And, somehow these massive systems of the government will come out and kick out that you also own, 10% of something that, you didn't disclose. So it's best to disclose it, and we'll help you figure out what you really need to put on the table in order to get your loan. And the last question, Renee?
I have a last question and a request. We had quite a few folks ask for the contact information for these lenders. So I don't know if that's something folks want to put in the chat, or if it's something Andrew can follow up with folks letting Andrew know it's okay. So we can talk about that, Andrew, I guess, after this and get that out to folks, or if any of the presenters want to put it in the chat right now, you're welcome to do that. We had quite a few people ask what the first steps are. Where do they start? Who do they contact first?
I'd say Andrew.
Yeah, I'll tackle that one. If you are interested in any of these programs, whether it's financing through the SBA programs or through non-SBA programs, such as the one that Robert had reviewed through TruFund, I would recommend you kind of contact a small business development center or business advisor. There are 22 centers throughout the state. You can certainly use us as a conduit. We can work with those of you here in the New York City area, and then we can also introduce you to our colleagues elsewhere to make it most convenient for you. Business advisors will review the varying documentation, the varying programs that are in place, to sort of think about what might be a good fit for you, and make sure that you have a full sense financially, why this is going to stabilize your real estate costs. Conceivably, this is going to be an increase in terms of what you're going to have to come out of pocket for on a monthly basis in terms of your real estate. So it's going to stabilize things. It may put you in a better position, but you want to make sure that you have the revenue streams to pay for it. So our advisors will be able to work through that with you to make sure that you can make a strong case, and make sure the lenders, such as the ones you're seeing on the screen, will have a full sense of kind of where you're at and where you're hoping to take your business. And all the services, as Beth had mentioned, and hopefully I've said at least a couple times, are offered at no cost.
Right.
Thank you.
Renee, you could put on when you circulate whatever to the attendees today, there's SBA.gov. Remember, if it's not SBA.gov, G-O-V, it is not us. And unfortunately, we don't pay for Google optimization. So a lot of other things come up. So it's SBA.gov. You can find local assistance. We'll refer you to the SBDC network. You can find Andrew there in case you forget. Also, lender matches on there. The 504, I think you already put in. The New York District Office, Renee, is now using a contact sheet, and so maybe you can put that in as our contact, and then we have staff who looks at that every day and then circulates it to the appropriate person for answer from the district office. Thank you.
Yeah, I can do that for sure.
Today to moderate this panel.
No, I appreciate it. So you can also reply to the GoToWebinar email, and that will go right to Pace. So if you're not sure on any of the contact information that we mentioned or put in the chat, just reply to your GoToWebinar email, and that will go directly to Andrew's office. You'll be prompted to fill out a survey when we end this. We would love your feedback on how today's session went and future sessions you might want to see. There's a ton of other questions in there you're welcome to answer, but do not have to. Those are the two that I would love to see. I appreciate it. Andrew, any last words before we shut down?
Again, thank you, Renee, as always, for all your hard work in helping pull this together, and to Beth and your colleagues at the SBA for your ongoing partnership. It's been great and certainly easy to work with you all. So, and then to Robert, Mary Beth, and Justin, thank you for providing insights to the lending programs that you all work with and the great work and important work you're helping small businesses here in New York City. So thank you all for taking the time and really appreciate you being here.
All right. Thank you. Take care.
Thank you for having me.
Thanks, everybody.